Welcome to the online news desk of the Insurance Times. The Insurance Times is the first monthly journal of insurance in India, being published regularly since 1981. We are celebrating 43 years of publications in the year 2023. Here are some highlights of some important news. IRDAI removes minimum cap on insurance commission. IRDAI has lifted limits on the payment of commissions to insurance intermediaries. With this, life and non-life players will have more freedom in offering commissions, the compensation paid to and received by an insurance agent from an insurer for soliciting and procuring an insurance policy. This move provides insurers with greater flexibility in managing their expenses by replacing the previous cap on commission payments with a board-approved cap. These regulatory changes are effective from 1st April 2023. Insurers must ensure that they stay within the expense of management limit that they are obligated to follow. Motor insurance claims higher for electric vehicles. Insurance claims from damage to electric vehicles, two-wheelers, are turning out to be up to 20% higher in value than conventional vehicles, while they are 50% higher for four-wheelers. Also, the frequency of claims is higher in electric vehicles compared to internal combustion engines. The higher value of claims is because of the need to replace an entire assembly rather than repair it due to the non-availability of child parts. Also, there is a higher usage of plastic and fiber to keep the vehicle weight low, which increases the damage. The share of EV has quadrupled from less than 1% of total vehicles insured before the pandemic to around 4% now. In both two-wheelers and four-wheelers, 98% of claims are due to loss claims caused due to accidents. However, fire loss, improper charging leading to fire, damages to charging unit, and flood losses were other common causes for claims as well. Ministry of Road Transport likely to delay third-party premium rates for motor insurance. The Ministry of Road Transport and Highways has increased the third-party motor insurance premium for various categories of vehicles. According to the revised rates notified by the Ministry, private cars with an engine capacity of 1000 cc will attract rates of 2094 rupees compared to 2072 rupees in 19 to 20. Similarly, private cars with an engine capacity between 1000 cc and 1500 cc will attract rates of 3416 rupees compared to 3221 rupees, while owners of cars above 1500 cc will see a drop in premium from 7897 rupees to 7890 rupees. IRDAI has introduced direct plans in insurance. The insurance regulator has asked insurance companies, life, non-life, and standalone health insurers to devise a board-approved policy for directly sourced policies. Insurers will have to define a manner in which they will reduce premium if a policy is sourced directly to a policyholder. In a Gazette notification, IRDAI said, every insurer shall have a well-documented policy approved by its board on annual basis, which shall specify manner of transfer of benefits arising from reduction of expenses and/or from directly sourced businesses to the policyholder by the way of reduction in premium. With this, insurance companies will have to reduce the premium if policyholder buys an insurance policy directly from an insurer. Such a reduction will happen from expenses of management, which includes agent's commission. We shall be back after a short commercial break. Please stay tuned. Welcome back after the break. IRDAI increases EOM limit based on product categories. IRDAI has increased the management expenses for insurers, which will allow them to pay commissions of up to 100% of the total premium. For life insurance, the EOM limits are based on product categories. As per the new regulations under the pure risk product category, such as regular premium term insurance policies with tenures of over 10 years, the EOM limit will be 100% of the first year premium. The expenses on renewal premiums can go up to 25%. For traditional policies such as whole life, money back, and endowment policies, the maximum limit is 80% of the first year regular premiums and 17.5% during renewals. For single premium policies and annuity products, the maximum limit for life insurers is 5% of the total premium with additional expenses based on criteria such as allowance for head office expenses and InsurTech insurance awareness. Insurers may get to sell related services. General insurers may soon be allowed to sell services such as gym memberships, vehicle repairs, and other diagnostic services in addition to their core insurance offerings. The proposed changes to the Insurance Act aims to enable insurers to diversify their product offerings and enhance the value of their distribution operations. According to the report, the government is currently finalizing the draft of the Insurance Laws Amendment Bill 2022, which is likely to be introduced during the monsoon session of Parliament after Cabinet approval. ICICI Lombard launches Anywhere Cashless feature. ICICI Lombard has announced the launch of its latest feature, Anywhere Cashless, for their health insurance policyholders. This new feature allows customers to avail cashless facilities at any hospital even if it is not a part of ICICI Lombard's current network of hospitals. The Anywhere Cashless feature is subject to the hospital's acceptance of the cashless facility. To use this feature, policyholders must inform the company 24 hours before their date of admission. They can then provide basic information about the patient, policy details, hospital name, diagnosis, treating doctor, etc. This feature can be accessed through the IL Take Care app under the Service We Offer section. This feature was initially launched as a pilot and now can be availed through the IL Take Care app across India. Two new life insurance players granted license. IRDAI has granted licenses to ACO Life Insurance Limited and Credit Access Life Insurance Limited to start life insurance business. The regulator has granted a license for life insurance business after a gap of 12 years. Earlier, these licenses were granted in the year 2011. With the grant of licenses to these two companies, the total number of life insurers operating in India have gone up to 25. IRDAI also said that another 20 applications are pending at various stages of registration in life, general, and reinsurance categories. As the regulator is poised to increase the penetration of the insurance business in the country, these new life insurance players will give a push to this mission. This was all from the Online Insurance Times news desk. We will be back with latest news in insurance industry in our next edition. Please click on the subscribe button and press the bell icon to get notifications for the next video. Stay connected.